What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the monthly time frame, starting off here with the good old monthly. So the monthly candle last month was pretty bearish with a pretty long body bearish candlestick here with a lot of selling. You can see that with the volume here, increase in bear volume from April to May. The RSI has now dipped down to 63, so back below the oversold area of the RSI, which is this white zone here. If we're looking for a long-term investment in terms of buying Bitcoin versus a trade, this is a buying opportunity if you're a bull and you believe long-term that we're going to go above 65K at some point in time. So the way you can treat this if you're an investor is this is an area to buy, and then if we ever do get up to all-time high again, I'll make a minimum of 70% on my investment. Give me 1 second. I'm going to blow my nose. The cold's getting me. Jim, the cold. All right, so that's a long-term investment. From a long-term investment standpoint, you want to be looking at these high time frames to position in. And like I said, nothing on this channel is for everything on this channel is for educational purposes only, is not intended as financial advice. So take this with a grain of salt, but what I do when I'm looking for a long-term investment is I'm looking for big pullbacks like this so I can scale in a long-term buying position on spot, which means you actually own the cryptocurrency versus something like a margin trade where you're borrowing money from the exchange and you might not necessarily own the actual asset. You might be owning a contract. So you still have exposure to price movements when you have a contract, but you don't actually own the underlying cryptocurrency itself. So buying spot means that you're not worried about potentially getting liquidated, meaning that your position will automatically be closed due to you not having enough money to pay the exchange back for the borrowed money that you took out. And so that's an important distinction to make. Buying on spot is, typically what people do when they're buying a long-term position. So this is still potentially it's still a buying opportunity if you're a long-term investor, and you're looking for that monthly high or low to be set. We could go lower, but at this point, you just want to get a better price than you would have gotten up here. Then this is still a good area. So let's go to the weekly time frame and see what we're looking for from a more of a trading perspective here. So on the weekly time frame, we can see that this light blue zone right now is still holding for our support. We have not dipped below it. We got close here, but we didn't actually get below it. Last week we had an increase in bull volume above average bull volume here, and a pretty weak bullish candlestick. But you can see this week so far we've traded up since the open, and we have not broken that inside bar to the downside, which is good for the bulls. The bulls need to see us come up and bounce off of this level, this blue level, because if we go right through this zone and we do not bounce off of it at all, and we just go right through it, we close 2 candles below it, and then we retest it, meaning the price rises and comes back into it. This is going to be resistance, meaning it's going to suppress price, and then we'll go down to likely this light blue level down here, down at about the 19K level. So what we might see this week is we might go above the high of the previous week right here, which is at about 40,920. So for us to form a weekly low for this candle right here, the low of this candle to be considered the low, we need to come up. So we need to break the high of this inside bar candle, which is at 40,920. If we go above that this week, the low will have been set here. Then we'll look for a lower high to be set somewhere below the previous high of about 59,750. And the reason we're looking for a lower high there, the reason why I think it's likely that we will see that, is because of the size of the move. So we talk about this on the channel regularly. When there's a big movement in price, it's typical for you to have to come up and set a lower high before coming down, trying to form a higher low, and then coming up and breaking to a higher high. It's unlikely when you have a price drop like this one, where we dropped about 50%, for us to then just, rise from 29K up to, past here over 100% without forming a lower high and then a higher low and changing that trend back to the bulls. So that's something to be aware of, because if we're looking for a weekly lower high to be set, that means on the lower time frames, we need somewhere where the price is going to reject off of. And my bet is this gray zone right here. And the reason is because on this 3-day time frame that we're looking at right now, this was our resistance zone, or I'm sorry, our support zone right here, from when we had our bull trend of a low, high, higher low, and then higher high pattern. So you can see I took the rectangle tool, I attached it to both sides of this candlestick right here using the magnet tool, which snaps it to the area. You can see it snaps it there to the bottom of the wick of the candle, and now I have my support zone. So you can see we came into here, we tested this the first time, boom, we went to new all-time highs. We came in, we tested a second time, and we bounced off of it again. But the third test, we pushed right through it and closed several candles below it. So now, if we end up coming up and going into this level again, this should be resistance, and this is a simple support resistance flip zone, where we once were support right here, and now once we close below it, it will be resistance likely. So that level goes from about 47K up to about 52K. Let's go to the daily time frame and see what we're dealing with here. We still have our equilibrium pattern that we're looking for to play out in the coming weeks, and this is where the price is tightening up, making higher lows and lower highs, until eventually we're going to make a higher high or a lower low. So I talked about in yesterday's video, it's more likely that we'll make a lower low than a higher high, but it's not impossible for us to make a higher high, given that we have this light blue weekly support zone, which this is the first test of. So yesterday we had a daily bearish candlestick here, which I was talking about the potential for a bearish divergence, with the price making a lower high if we were to make this a high, and then the RSI making a higher high. So that would have been a bearish divergence. But you can see today, if we zoom in on the price action for today, we've invalidated that as a potential high, because as soon as we opened, we've traded up past that previous daily high. So we haven't broken the low of the previous daily low here, which would then make this a high and validate that daily bearish divergence. So that's what we talked about yesterday. It's not actually validated until this is actually set as a high, meaning we need to break the low of that candlestick. So it hasn't been broken. So we're still waiting for this pattern to play out, to either break for a higher high or break for a lower low. So there's really two zones that we're looking at. It's this gray zone right here from this daily candle back on February 7th. That is currently our main resistance zone. And then our daily support level, which is down here from our bull trend right here. And, whoops. And this goes from about 34,000 down to about 32,100. So this is going to determine the momentum for price action for at least like a week, I would say, once we get a breakout from this pattern. And the tighter this gets, the more significant that breakout is going to be. So that's important to note that, the tighter that this gets, the more significant that breakout's going to be. It's either going to be way up or way down. So just be aware of that. And then let's look at the 4-hour time frame and look at one other thing I wanted to point out here. Whoops. So on the 4-hour time frame, we're closing this candle in about 6 minutes. It looks pretty bullish here. We've had a pretty good rise in price over the last several hours. The thing I wanted to point out on the 4-hour time frame was this potential edge-to-edge trade. And you can see, like, as I zoom out, how massive this cloud is for Bitcoin. So the Ichimoku cloud is an indicator where the edges of the cloud, this green part of the cloud right here, is, if the price is below it, is strong resistance, like you see right here. We ran into it and we rejected off of it, ran into it, rejected off of it. And then right here we closed inside of it, but then we got faked out and went down. Then we rejected off of it again here, and then finally we just closed back inside of it again. So what each edge of the cloud represents is a strong support or resistance zone. So now that we've closed inside of this is now likely, it increases our chances that we can get what's considered a edge-to-edge trade. Now, an edge-to-edge trade is a trade where you're taking either a long from the lower side of the cloud up to the top of the cloud here, or a short if we were entering the cloud from like the top half, and then, you know, shorting it down to the bottom edge of the cloud. But in this case, we're longing because this is the bottom edge of the cloud, and we're targeting the top edge of the cloud. Now you can see the cloud changes as we move through time, so it gets lower as we go. But if we were to, you know, hit the top of the cloud somewhere before June 5th, that takes us up to about 43.5K. And so there is a potential for an edge-to-edge trade here from there to there. And the way that I like to play this is, you know, you go long as soon as you enter as soon as you get a candle close inside of the cloud, like we just did, and then your stop loss is going to be a candle close back outside of the cloud, like we got right here. So when this was an entry right here, I think we talked about this on the channel. If we didn't, it might have been on the Telegram channel that I talked about that. But then we got stopped out right here when we closed back below the cloud. Now we're seeing the same sort of scenario here where we close inside of the cloud. If we can continuously stay in the cloud, the longer we stay in the cloud, the more likely it is this will play out and will move up towards that 43.5K level. So this will then go up to, you know, about there, and then our, you know, stop loss is going to be somewhere, you know, outside of the cloud. I mean, it really just depends on where the candle closes. You don't really have a stop loss when you're taking this trade. You don't actually have a stop loss like live on the books when I do it. I'm waiting for because what can happen is the price can go outside of the cloud but then close back inside of it, and so it could have stopped you out even though the trade might still end up going up to the top of the edge of the cloud. And so what I do is I wait for a candle close to close back. So what I do is I just wait for a candle close outside of the cloud for me to exit the position if I'm in the trade. So right now, if I were to enter the trade, I would go long, and then I would just hold that long until, you know, the price target, the other edge of the cloud, and I would exit the trade whenever we get towards the whenever we get a candle close below the cloud on this time frame that I'm taking on, which is the 4-hour. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com, where you can learn all of the fundamental elements that you need to get started generating consistent income for yourself, trading cryptocurrencies like Bitcoin and others, and also see how you can use these different things like candlesticks, trends, volume, and all sorts of other things to really make accurate buying and selling decisions. So you can get 20% off that course right now by heading to Leutheria.com. There's a link for that in the description below, and I encourage you to check that out. And until tomorrow, onward and upward.